In today's video, I'm going to share with you how to get more performance out of your brokerage account buying these financial stocks, bank stocks. So we earn over 100,000 per year in dividends at this channel, and we're up for the day 0.86%. So 0.86%, the market's up 0.04, the Nasdaq's down 0.05, the Dow's up 0.12. So we're earning 100,000 per year in dividends while being up $5,600 or 0.86% today. So how are we getting this performance? Also, if we go to our performance and value, you'll see that we're up 36.5% for the year. 36.5. The Dow's up 3, the S&P's up 15, the Nasdaq's up 32. So we're beating all of the indexes. And how do we do it? Well, there are three components to my portfolio, okay? One, I use margin. So for every $1 you put in your account, you get $4 of purchasing power. That's, yes, about $800,000 of purchasing power I have to then increase my income to over $100,000 per year in dividends, like I just showed you. So that's the first component of me getting my performance and dividends for that matter. The second component of me getting my performance is indexes. I tie my investments to the indexes like Cornerstone. Okay, Cornerstone is a 21% dividend. Everyone hates Cornerstone because it goes down on its chart, but you have to learn how to play this fund properly. It's a 21% dividend. I have over 400 grand in it, and it drips its dividend at the NAV. So every month, you see the market price here is $8 for Cornerstone, $8 here, and the NAV price is $6 down here, $6. So where is it? $6, $6.98. Okay, all these NAV prices, these recent prices, $6.52 here, 23% gain. $6.42, 25% gain. $6.27, 28% gain. So it takes its 21% dividend, Cornerstone, and reinvests it at the NAV. It drips the dividend at the NAV every month. So that's how I get my performance there, and it's tied to the indexes. We're up in days gains totals. We're up over $3,000 in Cornerstone, the two funds, CLM and CRF here. So CRF is the Nasdaq, CLM is the S&P. So that's the second way that I get my performance. First, I use margin, and then I buy Cornerstone. But you have to learn how to play it. So if you need help using margin or playing Cornerstone, email me for my e-guys at aikentodd48@gmail.com. The third way I get my performance in my account is through selling options. Okay, now we're not going to get into selling options today because we just made a video on options. It was a 20-minute video, and I hope it didn't scare any of you away. But I think what people don't understand with some of the comments I got on that video, what people don't understand is that I'm selling these options for different reasons than most people sell options for. Okay, I sell them to lower my margin, which as you can see here is 242,000. So I used a fraction of that purchasing power up top to get that income like I told you and to get the performance. So then I go and sell the options on my equity because my equity number is 170 now. It has grown to 170. So we have a nice cushion between us and a margin call, which is at $0. So our account has to fall 170 grand from here to get a margin call. So that's nice. We're nowhere close to a margin call, and we got nowhere close in 2022 either. We're nowhere close. And then so I use all that excess equity, the 170K that you saw up there, and then I sell these options to then lower my margin. So I got about 30 to 50 grand selling options at one time this year from these options plays. And now I have about 10 grand in premiums, it looks like. And then today I closed out one of the options, FAS, because if you saw the video yesterday on FAS, I said that I still wanted financial exposure. I didn't want to take the $400 profit because I still wanted financial exposure. I had a $1,500 gain or premium received in FAS, and I didn't want to take that because I was going to lose exposure to financials. Well, then this is what I went ahead and did, okay? I bought some bank stocks because, look, the premiums I received on selling those puts were pretty much the time value and the volatility experienced during the SVB fallout. When all the banks crashed recently and I sold puts, and you remember if you're here at my channel that I did that, then you'll understand how I made such high premiums on those puts, because you sell when there's high volatility. And so now that if you look at the charts of, like, let's say Bank of America and Citigroup, which I bought today, they're going sideways. So I got a chance to make a $400 profit closing out that put on FAS today, because the sector has gone nowhere, it looks like. And main stocks in the sector, like Bank of America and JP Morgan, and Citigroup. And so I get a chance to get another 100%, another $1,000, because I left $1,000 on the table, right? If I had $1,500 in FAS premiums, I closed it out for a $400 gain. I made $1,100, or I left $1,100 on the table. Okay, and I lost exposure to financials. But look, these have almost 100% gain in them. Bank of America, from $30 to $50, is almost 100% gain. Same for Citigroup. Okay, Citigroup is at 40-ish, and it was at 80. And we'll get to that chart in 1 second. So they have 100% upside in them almost. So I might as well buy 1,000 of each of them, Bank of America and Citigroup, and that's a $2,000 upside potential there if they reach old highs. Plus, you're collecting dividends because they have nice dividends, 3% and 4%. Citigroup even raised its dividend recently, I heard. Look at this chart of Bank of America. It's consolidating sideways at 28, and there's obvious support at 28 from March. Okay, a nice consolidation pattern, and look, it's above the 50-day moving average, which is the purple line. That's bullish. And then look at it on a max time frame. On a max time frame, you'll see that Bank of America is right on its 200-day moving average. This is the most important area you can imagine on a stock when it comes to stocks. 200-day moving averages on a long-term, on a max time frame. So the stars are aligning for Bank of America. Warren Buffett owns it. Also, if we go to Citigroup, you'll see the chart here. And if you need help using my charts, or using charts and understanding how I read my technicals on the charts and how I set up my chart, email me for my e-guides at akintodd48@gmail.com. If you buy my e-guides, you get my number, and I can always set your chart up for you if you need help understanding how I read these charts. These moving averages that I plug in, the MACD and the RSI, not only do my e-guides teach you how to understand them, but I'll help plug them in for you and set the chart at default for you for the next time you use that chart. Citigroup looks good on a max time frame. On a 1 year chart, it's gotten above all moving averages almost. So if we go look at it on a 1 year chart, sorry, I've been clicking around here on a max chart. If you go to a 1 year chart of Citigroup, you'll see that it's almost surpassed all of its moving averages. Okay, so here we just have to clear this 200-day moving average. The moving averages are very close. It tried to break it at 50 here and 50 here. That's where the 200-day is roughly. And so this is a very tight pattern, and it looks like there's a lot of potential upside to be had here. Look, this stock was at $80. So from almost 40 to 80, and 47 to 80. Warren Buffett's in this stock as well, I think. He bought some of this. So I like to follow whatever Warren Buffett does. Warren Buffett also sells options. So we're also up 6,000 for the day. Look, almost 6,000. Doesn't matter, but what matters is 0.88 compared to the indexes up here. And all that matters is performance, because performance means money. Some people are asking in my last comments, again, like, why am I selling these options and not arbitraging them or taking them for profits? Same reason why I don't want to take stocks for profits. They don't qualify to banks for loans. Okay, I don't want profits. You have to pay taxes on profits as well. I don't go for profits. I go for dividends. And then if you play these right, like a Cornerstone, if you know how to play it, ask for the special drip, sell it before the rights offering kind of thing, then you will make extra money out of this fund, not just the 21% dividend. You can get also 30% gains plus 30% plus gains per year, because that's the premium that it averages to its NAV, 30% premiums. You just have to play it right and sell before the rights offerings. Same for options. If you play these right, first of all, you sell these out long term so that you get index exposure. ET is a bellwether for energy, and it's safe. It's pipelines. So if I have all of the sectors of the options here, financials, healthcare, industrials with UDOW, then I'm diversified. And so that's performance, because if I'm diversified, I increase performance. If I increase performance, I increase my money. Also, you get days gains here. Look at these gains, okay? So I mean, like, yen is a fast moving stock, but I sell these long term, so they move pretty slow. Okay, and even Labu, that's a volatile stock, but because I put the date out so far, they move slow, but I still get days gains from these. So if you add up this whole column, usually you'll see another 1,000 from my option side, and that's how I'm able to get thousands in a day. And the money going up is good for me because it's more performance. The performance going up means more money. Okay, more money means more available for withdrawal, which is this number here. That means that I can withdraw, swipe my E-Trade credit card and checking card wherever I want around the world. I can go travel, I can go buy food, I can just do whatever I want with my E-Trade checking card. And if this available for withdrawal is high, I get to both live freely, financially free out of my account, spend, do whatever I want, and avoid margin calls. Because look, a 10% correction on the market, what would that be on me? 400,000 plus my 200 in debt. Let's just round it all to 700,000, okay, to be nice. A 10% correction would be 70,000. A 20% correction would be 140,000. So I have 30,170 minus 140, 30,000 of just extra cushion to go spend freely in life. But I would never do that because every time you spend, it robs you of precious equity, and you could be using that equity to invest at a higher rate, which then your dividends pay down your debt at the end of, in my case, less than 3 years. So I don't like to spend out of my account. I like to keep all my money in my account, protect myself from margin calls, and then invest the money at a higher rate. Either keep the money in my account so I can sell options against them, or invest in these dividend funds that give me a higher rate of return than just sitting in cash. And that then gives me a stronger base going forward of income, exponentially stronger base of income every year as I keep reinvesting it back into my account. One day I'll spend out of my account however I want, but for right now, I'm still just reinvesting it all back into the account. Every time I travel, every time I do everything, I make sure that I'm always watching my spending and I'm staying within my budget. Okay, you have to have a budget when you live in margin. You have to have a budget in life anyway, okay? Margin just makes you sharper, okay? And it also just gives you more income, more performance. So if you need help using margin or playing Cornerstone, email me for my e-guides at akintob48@gmail.com. Also, if you have any other bank stocks that you think are a better idea than Bank of America or Citigroup, please let me know. So that'll do it for the video, guys. Email me at akintob48@gmail.com if you have any more questions. Thanks.